host. Everybody's co-host, and recording is in progress. Now I've disclosed it to you.
Okay, I'm not going to leave the meeting.
I've got 15 seconds and I'm letting everybody in.
Okay.
Any last words?
This will be fun.
Yep.
It's always fun with you, Jonathan.
No, Brian. It's all of us together. When we get together, it's fun. We should give it a minute. Let it go to 75, Brian. Give it two more people. Last person.
Let's go.
Jonathan,
Let's go.
all I hear is the Muppets song when you just said that. And I'm admitting everybody on that note.
Cool.
Okay, they're coming in. Hello, everyone. Welcome.
Everybody.
Hello.
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 Come on in and then please mute your sound so that we can get started fairly promptly. It's looking good. I see a lot of friendly, familiar faces.
Bonjour.
Bonjour. You got to sing bonjour.
Oh,
How do you sing it, Adrian?
I always go bonjour like that.
That's what I say too. Bonjour.
Bonjour. Okay, I think we should go ahead and get started.
Adrian, am I logged in?
I'm sorry, what?
I said, am I logged in?
Who's you?
I'm Tom Luton.
Well,
I
if you're
guess
here,
so.
you're
If
logged in, Tom.
We hear you.
You can hear me, but you can't see me.
Okay.
Is that right?
It's no problem. It's no problem.
Oh, right.
Okay, everybody, please go ahead and mute yourselves. Okay. And my name is Adrian Leeds, and this is the North American Expats in France Quarterly Financial Forum for the first quarter, which is sponsored by Brian Dunhill of Dunhill Financial, who is on with us today.
Maybe I should take my headphones.
And the Adrian Leeds Group. And our guest speaker today is Jonathan Hadida with Hadida Tax Advisors. And before we get started, and before Jonathan gets started, let's just go through a little bit of housekeeping rules. First of all, stay on mute. Jonathan is going to make his presentation. Then we're going to have a Q&A at the very end, the last 20 to 15 minutes. And you can put your questions in your chat. Patty Sadowskis is on. Say hello, Patty.
Hi.
Okay, Patty's going to be monitoring the questions and offering them up. And before we get started, let me just remind you that we do these forums every quarter, and we have June 20th, we're going to be talking about how to make the most of your rental income. September 19th, we're going to be talking about why you might want to keep or denounce your American citizenship. November 21st, we're going to be talking about money logistics. And today we are talking about what you need to know about taxes before you move to France. And so on that note, I'd like to introduce Jonathan Hadida.
Excellent. Adrian, I am so excited to be here with you all today, especially Adrian, since you just finished shooting a House Hunters International episode in one of my 20 favorites, one of the 20 favorite arrondissements. So I'm very excited to see that one, Adrian.
Which one? Fifth?
It's one of my favorite 20.
Okay, cool.
I've got a list of 20 arrondissements that I like. It's one of the top 20.
Well, we had a lot of fun.
Excellent. So I am excited to talk to y'all about things to know before we move to France. So before we get to the tax stuff, a little bit about us. My name is Jonathan Hadida. We are Hadida Tax Advisors. We are a U.S. and French tax preparation firm assisting Americans in and around France. So basically, almost any question with regards to U.S. and French tax, we are happy to help. If we are not able to answer, we know someone who will. So without further ado, what are we talking about today? we're going through the main questions that we get from clients when thinking about moving to France. So the first question we generally get is, when am I a French tax resident? There's a rule of 183 days. Am I a French tax resident? We're going to cover that. Then we're going to talk about Brian's favorite subject, the US-French tax treaty, or as Brian loves to refer to it as the bee's knees for American retirees. So we're going to touch on that. Then we're going to touch on investing in France and the most dangerous person in France and why you as an American expat need to be cognizant and careful to avoid him or her. Then we'll touch on the sale of real estate in France as a French tax resident. Will France tax your US property? What will you be taxed if you sell your French property? We'll get to that. We'll touch on if you want to set up a French corporation, what are the implications from a US side? We'll touch on the French tax treatment of trusts, because France does not trust trusts, or as that was what my friend Brian told me a couple of weeks ago. And then last but not least, we're going to talk about inheritance planning, because as you may have heard, France taxes inheritance and estates heavily. So we need to do whatever we can before you come to France to ensure that you are set up to have, a happy life and not worry about your heirs upon your death. Okay. And then last but not least, as we always want to make sure you know about the tax deadlines, we'll cover the tax deadlines so you know when to start screaming at your tax preparer, when to start waving your hands, and so on. So, without further ado, French tax residency. Quand est-ce que j'ai besoin de faire une déclaration d'impôt française? When will I need to file a French tax return? So, a French tax return is required to be filed when you are a French tax resident. Now, who is a French tax resident as an American? A French tax residency, we look first to the French internal law. Okay, and under French internal law, there are three main criteria that French internal law have. First is, do you have your lieu de séjour principal in France? Is your principal residence in France? And that is defined as the place where your family meets. So if you've worked with Adrian and Patty and any of the ladies that work with Adrian, or Bernard, sorry, we can't forget Bernard in Paris, and have found a home in France, well, you will probably have a principal residence. We'll probably have a lieu de séjour in France and may be a French tax resident under internal law. May not. But the first question we ask is, do you have your résidence principale, your lieu de séjour in France? So that's one. Then from there, we look at where is your principal professional activity carried out. So that's number two. Where are you working? If you're retired, well, you're not working in France, so you don't have to worry about that. And then the last one we look at is, where is your center of economic interests? Where are your investments? Where are your businesses? Okay. So again, if you meet any of those three criteria, place of residence, place of professional activity, or place of economic activity and interest, you are a French tax resident. Now, before you start running off and saying, oh my Lord, I have to file a French tax return, if I have just a home in France, the US-French tax treaty allows a tiebreaker and breaks the tie in cases where you have a home in France and a home in America, or ties to both countries. And what the treaty does is it looks at four criteria mainly. It looks at, where is your home? Where is your center of vital interest? And the center of vital interest under the treaty is, where do you have your professional and social interests? Okay. So it's not simply where do you have a home, it's where are your professional and social interests lie. So again, if you're an American who has a second home in Nice, in Paris, in Montpellier, in anywhere in France, you will have ties to both countries. You'll have a home in both countries potentially. But more likely than not, your center of vital interests, so economic and social interest, will be in America. So you will therefore not be a French tax resident. Okay. From there, we look at where is your place of abode and whatnot. Okay. Again, these criteria are fact specific and circumstance specific. Every single situation is different. There is the 183-day rule. It is a factor that assists in our determination. It is not the end all be all. So again, the most important thing you can do if you're wondering, am I a French tax resident? Do I have to file a French tax return? Is reach out to us. We will help you look at your facts and circumstances and determine whether or not you're a French tax resident. There are cases where folks who've come in July and travel around Europe and have kept their home in America may not be a resident. There are cases where you move in November, but you're working for a French company. You're definitely a resident at that point. Again, facts and circumstances, and everybody's favorite line when it comes to taxes, it depends. So, any questions on residency? I know they said to keep your microphones turned off and ask for the chat, but if you wanted to ask questions on residency, I'm happy to take them now.
Jonathan, no offense, but I really think you should.
We're
go
not
ahead
doing
and
that.
find
Adrian doesn't like it. We're not doing it.
Okay, because otherwise we'll go down a rabbit hole.
Fair enough. It also gave me a break to take a second to before the next slides. So the U.S.-French tax treaty. So you are a French tax resident. Do I have to worry about France taxing me on my U.S. income? I am a U.S. retiree. Do I have to worry about being taxed in France? And the answer is the treaty will save. The treaty, as we say here, it is the bee's knees for American retirees. And the reason for this is under Article 24 of the U.S.-French tax treaty, U.S. source investment income, interest, dividends, capital gains, U.S. source pension income, U.S. source rental income is all reported on your French tax return, but you benefit from a deemed tax credit equal to the French tax. Meaning, at the end of the day, you do not pay French tax on this income. Okay? So again, U.S. sourced investment income, interest, dividends, capital gains, pension income, and rental income gets reported, but you do not pay income tax. Now, there's one specificity to pay attention to. France has a variety of taxes. There is also something called the PUMA tax, the Prélèvement Universel Maladie, under the Cotisation Subsidiaire Maladie. It's a 6.5% charge if you do not meet one of three exemptions. And the exemptions are you are working in France, you have a French pension, or you have a European or Swiss pension. If you don't fall into those, you may be charged this PUMA surcharge. There are potential ways to minimize that surcharge, provided you do proper planning ahead in front with regards to an IRA, U.S. Social Security. These are things that you should reach out to a firm, to a tax professional before coming to France and work through before coming. Because again, you shall not pay income tax. You may pay this PUMA surcharge, but there are ways to hopefully get around it, again, that are currently open practically, even if, and this, Adrian will like it, France is a little country of a gray zone. This is where we live in the gray zone under the PUMA. So again, we need to make sure we try and fit you into the gray zone with the PUMA. So again, reach out to our firm, to any tax professional to see if you can minimize the PUMA surcharge.
Jonathan, I just want to clarify that PUMA, P-U-M-A, is related to the French healthcare system.
Yes.
And it's that which provides up to 70% of all their healthcare costs, even though they never had paid into it to begin with. So it's a kind of health insurance in a way.
Exactly. So it's basically, and worst case scenario on PUMA, the way I like to phrase PUMA is worst case scenario, the tops out at about 350 some odd thousand euro with a floor of 20. So worst case scenario, you're paying 6.5% on 300,000, and it's $300,000 of investment income. So let's say you have to pay the PUMA, it's 20,000 euro. That's probably less than what you're paying Aetna or any of the US providers currently with a zero deductible plan. Again, France takes care of its own. So again, PUMA, this medical surcharge, you may have it, but there are ways to potentially work around it. And again, reaching out before is imperative. Now, this,
Can I ask you one other question?
yes, ma'am.
Is there any other country in Europe that has as good of a tax treaty?
Not a chance. Nope,
Nowhere close.
nowhere close. Adrian, we don't just say bee's knees for something that's not good. We use the bee's knees for something that's the bee's knees. And this, my friend, is the best tax treaty I've ever seen for American retirees. This is basically, if you're an American retiree and want to move somewhere where you're going to pay not more tax than you're going to pay in Florida and have the European lifestyle and eat the baguettes and watch the good soccer and all that fun stuff, this is it. This is the best treaty in Europe. There is nowhere close to this.
Okay,
On top of the advantages that you'll tell people about.
so if they're trying to decide between England or Italy or Portugal or Spain and France, this is still the best opportunity, is what you're saying.
Absolutely.
From a
Absolutely.
financial standpoint.
Yes, ma'am. Yes. From an
Okay.
income tax perspective, there is no doubt in my mind this is the best tax treaty in Europe. This is absolutely the best. On top of which, you know, I've been to all those other countries, and I'll tell you something. Down near Montpellier, there's nowhere better. So again, sorry, near Nice. I apologize, Adrian. Near Nice, there's nowhere better
To
than
be
near Nice.
discussed, to be
Yes,
discussed.
exactly, exactly. The one thing I've added, and this slide that I've added about reviewing your tax assessment, France doesn't, unlike America, does not give you your tax bill with your tax return. Your tax bill is sent to you a few months after you file the tax return. There is one thing to note for American taxpayers. For firms like ours, American taxpayers are our everything. But for the French tax office, you are 1 in 1,000, in some cases 10,000. So there is a very good chance that they make a mistake. I put this here to just let you know that if that happens, not to freak out, stay calm, we will handle it. These are things that happen. If you're in France for 5 years and you do not get a wrong tax assessment with US sourced investment income, you're living right. So just wanted to put that out there because it can happen and it does happen. Okay. Now to Brian's favorite subject, how to invest as a US person in France. Okay. How to invest to minimize your tax implications. And the answer is through US sourced investments. Okay. And US sourced investment advisors. There are advisors such as Dunhill Financial who invest for Americans living abroad and specialize in Americans living abroad. And now this may sound like I'm doing a sales pitch for them, but it's the truth. Using a US advisor and not going to a French bank as a US retiree or as a US person living in France will be the difference between a relatively simple life and a simple tax return and creating a mess for yourself. Now, the reason I phrase it like that is that under the US law, there are something called PFICs. And I'm going to let Brian explain what PFICs are because Brian loves talking about PFICs. Brian.
Oh, Jonathan just likes me talking about 4-letter words or 4-letter acronyms. Of which, if you end up having to talk to Jonathan about PFICs, you're going to end up considering it a 4-letter word instead of a 4-letter acronym. Way back in the day, essentially, people were sticking their money in little companies over in the Cayman Islands and all of these other little exotic islands that you should only use to sail in instead of to harbor your money. And so the IRS came up with this idea of saying if 75%, right, Jonathan?
Yep.
Of the revenue inside of the company comes in a passive manner instead of being from active work, then it will be considered a PFIC, a passive foreign investment company. Now, essentially, that means you're going to be punished on the US side in one of two ways, administratively or in a tax manner, and potentially even both. You don't want that. So essentially, the bad news is it sounds like that's a nice constructed company abroad, but any form of investment that's managed abroad, any UCIT, any exchange traded fund that's traded outside of the United States will automatically be considered a PFIC. And therefore, you'll have the administrative burden and potentially even the tax burden on the US side to pay those additional taxes. And that's what you don't want, especially when we can buy from the biggest financial market in the world, the United States, and only be taxed in the United States. So avoid buying anything outside of the United States.
Because now I'll do the tax spiel. PFICs require punitive US taxation. You will be taxed at the top marginal rate for the period of time you've held the PFIC and pay interest on the period of time you've held the PFIC. The longer you hold a PFIC, the more likely you're going to pay up in the 40 to 50% range of tax on any gain you may have on these PFICs. So from a tax perspective, they're heavy. From an investment perspective, I'm not the investment advisor. That's Brian's role, and that's why he's got funds such as DF Direct and stuff like that to help Americans with those kind of investments. But basically, from a US tax perspective, you are far better off not having a PFIC than having one. Because a PFIC, you will wind up having to pay anywhere from 37 to, God knows, 50, 60%, and you'll wind up screaming at me. Or you'll wind up screaming at your tax advisor saying, how is this possible? And the tax advisor will simply say, you invested in a PFIC, and then you will say a not nice 4-letter word after it. So basically, that is how to invest. And that's why I colloquially say the most dangerous man in France, man or woman in France, is a French banker who is kindly selling you, venez, let me interest you in a nice.
Let's correct that, because Americans consider bankers the friendly guy at the retail bank. Those guys are fine. It's the investment professionals at the banks that are selling investments that we're afraid of, Jonathan.
They're not doing it on purpose. For your French client, they are great investments, but you are not French clients. You are Americans, and Americans need to invest with American investment advisors.
And that's the same for Canadians, right?
I'm not a Canadian specialist, but yes, I believe so.
Does Canada have the same treaty
No,
or similar treaty?
no,
No,
No. Wow.
no.
it's America. It's America. It's basically, honestly, I phrase it as it's a thank you for the war. But hey, you know, I'll be honest with you. If the Americans can find the guy who wrote the U.S.-French tax treaty on the American side, you should. The Democrat, Republican doesn't really matter. That dude deserves a high five from every flipping American living in France.
Okay.
Anything else, Brian?
No, I'm Googling who actually wrote this dang thing back in the
Fair
70s.
enough. Oh, next, sale of real estate in France. So again, you've worked with Adrian and her team. You bought a nice pied-à-terre in Nice. Now, 6 months, 10 years, 13 years later, you realize that you want a new pied-à-terre in France, and you can find a penthouse on top of a gym. Well, if you could find the penthouse on top of a gym that has a nice big terrace overlooking the sea, you've got to go buy it. Well, you have another pied-à-terre. What are you going to do with your other pied-à-terre? You sell it. Well, France, when it comes to selling real estate in France, has, as you can imagine, high taxes. And French taxes on the sale of real estate are at 36.2%. So it is significant. Now, France does allow you to have an abatement depending on how long you've held the property. So the longer you've held the property, you will reduce your taxes. If you hold the property for over 22 years, you will pay no income tax, but you still will pay some social charges.
Okay,
If you
but
hold the
Jonathan,
ma'am.
that's only on secondary
Yes,
properties,
sorry, apologies.
not
Secondary
on primary residences.
Yes, sorry. If you own it as a principal residence, I apologize. It's the first question there. Is it your principal residence? If the answer is yes, you do not pay capital gains tax.
That's right.
If it's a secondary residence, and I apologize, I made a mistake in my example. If you hold it as a secondary residence, you will unfortunately have to pay taxes in France. And those taxes will be up to 36.2 and reduce year over year to year 30, where you will have to pay no taxes. Okay. Now, the one thing you will have to note is that, let's say it's a secondary home. France will give you, will tax you. America will give you a credit for any taxes paid in France. What we find on secondary homes is that if you've held it for less than 20 years, you will pay taxes to France. If you hold it for 20 years or more, you will pay a little bit more tax to America. It's just the way the cookie crumbles. Now, there is also one other thing, and this comes from a question we've had recently quite a bit. What happens if I sell my property in America after I've become a French tax resident? Well, the answer is you generally, as much as possible, should try to sell your property before coming to France. Because if you could sell your property before coming to France, or France will not have any taxing rights to it. Secondarily, let's say you move to France today. Your home has been on the market. It closes in a month. In those cases, France does provide some leniency from having French taxes on these sales. However, you have to structure properly and have to be certain that the home was on the market and available for sale before you come. And it has to be sold within a short period of time. Up to about a year is about the leniency that they'll have. So
Okay, but Jonathan, that person is not even yet tax resident at that point. If they've been here a month, they are not tax resident in France.
No, but again, it depends on facts and circumstances. So we've had facts and circumstances that folks have moved to France and moved their whole life to France. Where you've moved your life to France and become a tax resident, France, again, will provide you a leniency provided you sell it within your first year. Again, it's a facts and circumstances question. So it's just important to note that if you have a home in America and are looking to sell it before coming to France, it's generally better to get it done before you come. If you become a resident in France and then sell it, France may tax you, but again, facts and circumstances, and provided it's been on the market before you come, you should not pay any taxes on that sale. Okay? But again, it's something to look at and to plan out before you come to France.
May I make another comment about that as well, if you don't mind?
Absolutely.
It's really interesting because the first 22 years where the tax gets reduced for capital gains, right? It's the last 8 years that has to do with Social Security. And the truth is that if you are American, right, and you're paying Social Security in the US and you're not benefiting from Social Security in France, then the truth is that the EU says that you shouldn't owe that tax to France because it's Social Security. But France said, screw it, we're going to go ahead and charge them anyway. And you can pay it, and then you can go back and actually make a claim with the French government and get that money back. Whether you're successful or not is another question. You know, there's been a whole big debate between the EU and France over this issue. But anyway, it's a detail.
Perfect. But again, sale of property in France, the two questions we ask, is it your principal residence? And then how long have you held it? Okay. Then from there, setting up a company in France. So we've got a lot of clients who come over and want to set up a foreign company. What would happen if you set up a foreign entity? Now, this is only from a US perspective. If you set up a foreign company in France, you will have additional US filing requirements. It's important to note that these requirements are annual and are subject to heavy potential penalties for non-disclosure. I've added this slide here just to make it clear. If you set up a French company, you will also potentially have a US filing requirement of 5471 for a foreign corporation, an 8865 for a foreign partnership, or an 8858 for a disregarded entity. Each of these have up to, I believe, 10,000 and more penalties for non-filing. Okay, so it's just important to note that if you decide to go off and open a bakery in France and set up an SARL, you need to speak to your US provider before doing that. Okay, that's the only thing I wanted to add here, and that's the only reason this is here, is just in case.
Because I have a US company and a French company, I basically report all the bank accounts and all the earnings on both sides, period.
Yes.
It's not that big a deal. It's just a matter of the reporting.
Your tax return, Adrian, the 5471 is a heavy filing to do, because the 5471 is basically a mini corporate tax return within your personal tax return. It's a heavy filing, and there are ways to get around it by doing something called a check the box election. Again, facts and circumstances, and everybody's case is particular, but it's the most important thing to know is that these exist, that these are out there, and you need to talk to your US provider. It's not the end of the world. It's not a reason to stop doing your planning and whatnot, but it's just, we've had enough clients come to us after the fact and say, hey, I've had this French company for 3-4 years, happy days. And then you come back and say, well, oops, you've got a problem because you've got to go back and correct the past. So again, I'd rather tell you up front, you may have this filing requirement. Speak to your US provider just to be certain you don't fall afoul of the US government by doing something like this. Okay, so now for the estate and trust planning. Trusts. How does France treat US trusts? Or as my friend Brian said to me a couple weeks ago, France does not trust trusts. And that unfortunately is the case. So in the US, a trust is a prevalent planning tool to get around probate, particularly a living trust. When I worked in America and I worked in Phoenix for a number of years, the first thing I would say to anybody who had a child is you've got to go in and get a living trust, because a living trust needs to be in place the day before you die. And unfortunately, none of us know the day we're going to die, so it's better to get it placed before. Now, that's from an American perspective. From a French perspective, France doesn't see it that way. France sees trusts basically like a tax evasion scheme. Be it as it may, we all know it's not a tax evasion scheme. We all know it's there to ensure that you can pass your assets to your heirs without probate, but France does not see it that way. France has a relatively heavy tax burden on trusts, and we're going to get to point 3 here, a relatively cumbersome and potentially onerous treatment of trusts. So trusts, a US trustee, a settlor, a beneficiary of a US trust is required to file additional filings in France for their trust. There are 2 types of filings: an annual declaration. So basically every year on January 1st of the year, you are required to file a declaration to the French authorities saying, these are the assets held in the trust. The trust holds bank account X, stock Y, home Z. Easy enough, but it's an annual filing. Additionally, you have to do an event filing for any time there's any event, there's any money taken out of the trust or anything like that, or anything put into the trust, you have to do an event filing within 30 days of doing something. So again, if you have a trust and you're using it as a bank account, you take money out, you have an event filing 30 days after you do it. Those are heavy. Additionally, in 2023, there was an opinion by the Conseil d'État of France, which is the French High Court. Now, this was not a case. This was the government went to the French authorities and said, hey, we value your opinion. Can you please give us your opinion on trusts and how they should be taxed? Okay, so again, not a case, an opinion. However, the opinion was negative towards trusts. I cannot phrase it enough. It was incredibly punitive to trusts, to the point that any income that is distributed from a trust and earned in the year potentially, under this opinion, does not benefit from the US-French tax treaty, is potentially subject to double tax, and France wants America to give a credit. And I will tell you that the chances of the IRS giving a credit because France wants them to, it's about as much as I have a chance of running a marathon tonight, because I'm not in shape. Long story short, trusts have very, very complicated existences in France. They need to be reviewed before you come to France as to whether or not you should keep your trust. Because again, if a living trust primarily is for probate. If you're going to be moving to France and spending the rest of your life in France, you may not need this trust anymore, okay? You need to have a conversation and reach out to us before you move to France, because the recent decision is incredibly harsh and may lead to very difficult taxation in the future. Our team includes a trust specialist. So again, you can reach out to us. There are other trust specialists in France, but we have a trust specialist on our team who could talk you through the tax implications of having a trust and what it means to you, okay? We have some clients who have trusts that are set up for their disabled children. Those can't be closed, but living trusts and you're moving to France and you're not going back, you may not need it. Again, facts and circumstances, everybody's situation is different, but these are the kind of things you have to think about before you move to France, okay? That's trusts. As I said, France does not trust trusts. So let's get to the last slide. This one here is the slide where Adrian, at some point in my presentation now, is going to scream, "But Jonathan, you have to live." And she will. And she's right. You have to live. It's just money. Let's be honest. You'll be dead you'll be dead and it goes to your heirs. But let's plan this out, people, before you come, and make it that, again, as much as possible, we reduce your tax.
It depends on how much you care about your heirs.
There you go. It depends on how much you care for your heirs. But if you care about your heirs, we want to do some planning before, okay? So the US tax laws for estates, as you may know, are relatively beneficial. It is up to 13 point something million dollars of exclusion currently. Now, there is one main important thing to note on this, and Brian will be happy that I'm talking about this because Brian wanted to talk about this, is there is in 2025 a sunset of the Trump tax changes from 2017. So the estate laws in America are going to be going down by about half, potentially in 2026. So there is a time now from a US perspective, irrespective of if you move to France, to do some planning. Again, you should be reaching out to your tax advisor if you are thinking of doing some planning to do it before 2026, when the old rules come in, which are not as beneficial as the current rules. But coming back to y'all who are coming to France, the US laws are magnificently, well, compared to France, they are magnificent. In America, you can gift or when you pass on an estate of up to 13 point something million tax-free. In France, it's nowhere close to that. If you pass in France and you want to, for example, give money to your children, well, it's a graduated rate, but if you're giving to your children over 1.8 million euros, your children are going to pay a 45% inheritance tax. If you move to France and you want to give money to Adrian Leeds because she is so great and fantastic, and you are not a blood relative of Adrian, well, guess what? Anything over 1,594 euros, Adrian's going to pay 60% inheritance tax. Okay?
But I'm happy to take it, Jonathan.
Fair enough.
Tax.
But basically, there is planning to be done. So what planning can you do? The planning you can do is to look to potentially do gifting before you come to France. Because again, the US laws are so much better. In France, just to make it clear, let's say you have a daughter or a son who's going to have a wedding in a couple of years, and you were planning to give them $200,000 as a wedding gift. Okay, now you move to France. You give your child a couple of years now, you're a French tax resident, just to make that clear, and you give your child $200,000 for his or her wedding. Well, that's a gift from French tax purposes. You have to declare it on a French gift tax return. The first 100,000 euros, tax-free. Cool. The other 100,000 euros, taxed. And in this case, on 100,000, it's taxed at 20%, up to 20%. So you can wind up having to pay about 20,000, again, about 20,000 euros on this gift that you had intended today to give to your child in a couple of years. So if you can give to your children before you move to France, you can avoid this French gift and inheritance taxes.
Or you just
Again.
pay for the wedding, Jonathan.
Well, if you're getting $200,000, I'm assuming you're paying for the wedding and then on top of it getting more.
Okay.
It's going to be a nice wedding, I hope. Long story short, all this planning must be done before you move to France. Okay? There are conversations to be had. And again, we have an estate planner that works with us who can help you look at your situation. And we can work through, again, from a US perspective, we need to get your US attorney on the line, but we can work through how to best plan it out for yourself. We are working currently with a couple who are looking to buy a property in France, and they want to ensure that the property is transferred to their heirs properly. Again, by doing proper planning up front, and if anybody has not subscribed to Adrian's newsletter, please do so immediately. But if anyone's read Adrian's newsletter in the last 6 months, she taught, well, I don't know if it was 6 months or a year now, she talked about démembrement and the giving of her home in Paris. These are things that you could potentially do some planning before you come to France. Again, proper planning and calling up, it's a consulting call may save you hundreds of thousands of euros of tax. So again, reach out before you come, because there could be potential planning to be done to avoid heavy French inheritance and tax planning. Inheritance and gifting tax, sorry.
But Jonathan, clearly not everybody on this webinar has, I mean, a lot of these people have already moved to France. Okay. So we're going to have to figure out how to fix that.
Yeah,
Right.
and again, that's one of those things. So if you're in France, we then have to see. So for example, I will give an example. Bob and Sally. Bob was 87 years old. Sally is 60. They have children together. Bob wanted to ensure that he gave Sally all his assets when they passed. France has forced heirship. Therefore, when he passes, theoretically, the assets should go to Sally and then to Bobby and, well, the kids. Again, there is potential planning to be done by using a French estate attorney to make sure that, again, your wishes are followed while minimizing tax implications now as much as possible. Again, we are not magicians. As much as possible, before you come to France, we should have a conversation. If you're in France, we can do the best we can. Again, you know, to get around forced heirship, it's tricky to again, these are things we need to look at on a facts and circumstances, case by case basis, and we're more than happy to help. You just need to reach out.
As an American citizen, you can elect US law, okay, for rather than French forced heirship in order to bequeath your assets the way you like. However, that doesn't change the tax situation.
Yeah.
Okay,
Now-
that's still going to get taxed based on whatever has been bequeathed, the heirs, at any rate, the heirs.
Yeah.
So as you know, one of the things I was able to do was to transfer the title of my Paris apartment to my daughter, which did cost a certain amount of, you know, notarial taxes and fees and gifting taxes in order to do it. But it was a lot less expensive than if she would have had to pay those taxes after my death. So it was worth it. It was worth it to me, you know, to
Absolutely.
save her that kind of money.
Absolutely. And again, this is the kind of stuff that we need to look at. And when it comes to démembrement, the key dates to note are when you turn 61, 71, 81.
81, right.
Because every 10 years, the décote differs. So again, this
That's
is the kind of planning, Adrian, she looks like she's 45, but I don't want to say what her real age is, but she was closer to one of the décotes, even though she does look not a
I
day
did
over
it
45.
before my 71st birthday.
Yes, exactly.
Okay.
So she did it before her 71st birthday, ergo she saved her daughter money by doing it at that time. If she had waited a year or two more,
Oh, it would have
unfortunately,
cost me more.
exactly. So again, these are the kind of planning tools that we can use to get to, again, minimize your taxes and minimize your estate taxes and ensure, again, the US law, to get the US law to apply, it's a simple will. Honestly, a French will, all you need is a pen, a paper, and a notaire. It's not really that much. It's not an expensive process. But again, it all requires proper planning. Okay.
I
So,
just both of those things, by the way. I did a US will and a French will
yep, exactly.
recently to get everything in order. Yep.
Did you do your French will by handwritten, Adrian?
Yes, I did. Handwritten will, and the notaire signed off on it, and it was easy peasy.
Exactly. So basically, and again, it goes into a repertoire. They have this nice little computer vault somewhere, and basically, they type in your name when you pass, and they'll find your will. It's not like you're not going to have the Aretha Franklin or the Queen situation happen. Queen, what's his name? Prince, sorry. The Prince situation happened in France because France apology, that's on me. It happened in France because it all goes through the notaires.
Prince the Queen.
Sorry? Yeah, the Queen. No, sorry. That's on me. Sorry. But yeah, so basically,
just really quick on Adrian's point right there, that she has a will in both places. Adrian is a special person because she has a lot of assets in different places. Everybody doesn't necessarily need a will in both places, and you should definitely consult your attorney about whether you need a will in both places, because the biggest problem can be that you have a will in both places and they disagree with each other. So if you're going to have a will in both places, make sure that they are synchronized perfectly.
Most of
Yes,
the French's wills, Brian, basically, I'll bet $1 Adrian's French will. All it says is, to whoever finds this, please look at my US will. Bisous, bye-bye,
That's exactly
Adrian.
right. That's exactly correct. It refers to the US will. That's all.
That's
And the
what
number
most
of
French
wills that I've seen that have been different on both sides, that's exactly how I want them to be. But I've
Yes,
seen
that's
many
exactly
different.
right. The French will just refers to the US will, and the US will is actually the
The lead.
foundation. Yeah, the primary will.
Yeah. So that's basically what we see in France. But again, when it comes to wills, one last thing, if you're buying a property in America and have a French property, even if you're staying in America, you may need to want to have a French will. Again, reach out and we can put you in touch with an estate attorney who can help you with this kind of stuff. Again, these are the kind of planning tools that you need to do. But last point, just to re-hit it, if you're moving to France, before you come, we should have a conversation to see what we can do to potentially reduce any potential inheritance tax. Okay? Now, tax deadlines, because everybody's excited for the tax deadlines. The US tax deadlines. April 15th is coming. Oh my Lord. We should all panic. Should we panic on the streets, Brian?
Absolutely.
Absolutely not is the right answer, Brian. Absolutely not. Because we live in France, and US taxpayers living in France living outside of the United States benefit from an automatic 2-month extension through till June 15th. So if you're a US taxpayer living in France, your tax deadline is actually not April 15th, it's actually June 15th. Now, by April 15th, you are required to pay any tax due in 2023. Okay, so April 15th, you pay your taxes due. June 15th is your deadline. you can file an additional extension through till October 15th. On October 15th, that's the deadline for both income tax returns and FBARs. From there, in October, if you still have not finalized your US tax return, you could file an additional extension until December 15th. And this is because of the fact that you live abroad and it may take longer to gather all your information. So there's a reason why tax firms such as myself, we are incredibly busy between the months of October and December. It's not because we're sitting around all year twiddling our fingers. It's because our clients get a lot of their information later in the year, and especially when they're French taxpayers, they usually get their tax assessments in September, October of the year. So there is again, your tax deadline could be extended all the way till December if needs be. Okay. The most important thing though is to pay the tax due by April 15th, and then we will handle filing extensions on your behalf. On the French side, the deadlines on the French side vary year to year, but this year's filing will open on April 13th. That means that the tax forms will become available on April 13th. Our team cannot prepare, and our team and no team can prepare a French tax return today because none of us have the forms, because the government have not released the forms, and they will only be released April 13th this year. From there, the deadline depends on where you live. Okay, so depending what département you live, there is a different tax deadline. On screen, you'll see the deadlines for working with a tax professional such as ourselves. But the deadlines for working with a tax professional such as ourselves are mid-May, the 23rd of May, which is the deadline for non-resident filers, as well as the deadline for first-year filers. And then June 6th, which is the final deadline for filing your initial tax return. Okay. Once you file your French taxes, you will get an assessment come September-ish. So September, October, November, where the French authorities will tell you what the tax balance due, if any, is on your tax return. So again, the tax year in a French tax year. So if you're moving to France your first year and you're expecting to get your tax return done in February, ain't going to happen. You're expecting to have, a huge amount of time to file your tax return. Ain't going to happen, folks. The tax forms come out mid-April. In the first year, you have from mid-April to mid-May. It's a sprint, not a marathon like in the US. On the US side, we can extend. We have until December. Marathon. France, sprint. Mid-May for first years, beginning of June for everybody else. Okay. That is my spiel for today. My name is Jonathan Hadida. We are Hadida Tax Advisors. We are available for any of your US and French tax needs. I'm sure there's a question or two for the Q&A, so we'll cover those off. Hopefully answer as many as we can. Who's going to lead this, Brian? You take this?
Well, Patty leads this, but I'm gonna jump in really quick and answer your question. The double taxation agreement was initially signed in 1967, which would have put Lyndon B. Johnson and Charles de Gaulle as the two leaders of the two countries. So
there you go.
Your theory might actually be true. I can't confirm or deny it, but the timing lines up.
Yeah.
Wow.
No, but it's got to be. It's too good. It's too good of a treaty. The treaty is too good. It's it's too good. For all the French jokes America makes, my good Lord, the treaty from France is the best. So, Patty, what do we got?
Questions.
Lots of questions.
Several questions. And this is actually one that's probably more Brian's territory. And it says the tax treaty mentions US sourced interest, capital gains, pensions benefit from French tax credit, but US investment firms also seem to close accounts for US retirees if they discover they are resident in France. Any advice for keeping these investment income US sourced?
Absolutely, absolutely. You don't ever want to move it abroad, but a lot of firms don't want to work abroad, and that is more a regulatory aspect. So it has nothing to do with the laws, it's their interpretation of how they want to do their business. There are several firms that still deal in France. My firm deals with a lot of clients in France, and we also have a robo-advisor, df-direct.com, that deals in France. And those platforms use interactive brokers and drive wealth. So you're able to do it with us, you're able to do it without us. But if you're struggling because your financial advisor is not able to do business in France, it's probably because their platform doesn't want to do business in France. And therefore, you want to work with somebody that can and has the expertise to do so.
You mean like you?
Absolutely.
Okay, Patty,
Okay.
next.
Okay, this is a question for Jonathan. A retired US citizen living in France keeps a US address. Does the person pay state and local US taxes?
It depends, but the answer is probably not. Probably not, because it sounds like the person lives in France. So if you live in France full time and have given up your home in America and just are using, your sister's, your cousin's, your nephew's address, you probably will have broken state residency. So again, facts and circumstances of your specific situation will apply, but probably not. You'll probably have broken state residency and don't have to pay. But again, you will have to pay if you have state income earned from the state. So for example, if you move from California and you keep your home in California and renting it out, you'll have to file a non-resident tax return in California. Again, depends on the state, depends on your specific facts and circumstances.
Can I double down on that really quick, if you don't mind? Because everything you said was correct. But sometimes, especially in France, there's a difference between what the rules are and what the reality is. And essentially, there's two states that are notorious for chasing after people that have moved out of the state, and those are California and New York. I don't mess with New York. I think there's a little bit different phraseology on that, but essentially, if you're coming out of those states, you might want to step someplace else to reinforce it. They will chase it. You might have to spend a little bit more time with Jonathan to get out of paying that tax. You don't owe it. So Jonathan, you're completely correct, but I just wouldn't mess with New York or California. There's 7 states that don't have a state income tax. If you're able to step out through one of those states, you'll never get one because you've stepped out prior, and therefore your driver's license, et cetera, might be through those states. Bless you.
Patty?
I'm looking.
I saw one of these questions that I really liked, and I hope you're going to answer it the right way, Jonathan, if you don't mind. It was asking, because IRAs, RRSPs in Canada and 401ks are actually registered in the United States as trusts, do the French consider them trusts? I saw that and I had to ask it. I'm sorry, Jonathan.
I'm not going to answer that question. I'm not answering. I don't know. To be honest with you, when it comes to trusts, the answer is probably not. And the answer is no. So no, I would not worry about having a trust if you had an IRA. I would not worry about it, but my good Lord, if they start doing that, then that's a big
Clean
problem.
up. Exactly.
The answer is no. Let's be honest. The answer is no. That's a heavy question, a very, very, very heavy question. But yes, the answer is more likely than not no. The answer is no.
Okay, a real estate related question. Can real estate in France be considered a primary residence for French tax purposes if you own a house in the US, but live 10 months a year in France and spend minimal time in the US?
That's of course. If you're living in France and you're tax resident in France, then that becomes your primary residence. I mean, Jonathan, you agree, correct?
Yeah, absolutely.
Yeah.
Absolutely. Yeah.
That was what I thought too.
Again, everything when it comes to taxes is facts and circumstances, but in that case, it sounds like the facts and circumstances are you're a French tax resident.
What I'm seeing with the questions, and we are at 7:59, okay, so we're
Mhm.
a minute away. People seem to be confused between citizenship, residency, and tax
Mhm.
residency. And I think that everyone needs to understand that there's a difference in all three. Okay, because citizenship, of course, has nothing to do with taxation in France. France is a resident-based taxation. The US is citizenship-based taxation, right?
Yes.
So citizenship has nothing to do with any of these questions. It all has to do with residency. Start with that, right? And then you can have a visa that allows you to live in France, but that doesn't necessarily make you tax resident in France. Because tax residency has to do with the 183-day tax rule or wherever you consider home, correct?
One of the factors.
/ revert back to Jonathan's earlier slide.
Exactly. It's just that this is something, and I know we're going over 8 o'clock at this point, but I get this question very, very often, that there's a constant confusion between the idea of citizenship, which that's citizenship. That means you have a passport, right? You have a passport to that country, versus
Mhm.
residency. I am not a citizen of France, but I am a tax resident in France because I live here all of the year, and this is my home. But if I were living 6 months in the States and 6 months in France, or let's say 7 months in the States and 5 months in France, and the US, I would be tax resident in the US, not France, but I could still have legal residency in France with a visa. All of those things are possible. So we just have to make sure we really understand what we're
Mhm.
talking about.
Yeah, because residency looks at, facts and circumstances of your specific case. Where
Yeah.
is your home? Where is your center of vital interest? Where are you working? Again, you could have a home in France and not be a resident in France. It does not mean by having
Or
a
a
home.
tax resident in France.
Exactly. Again, yes, always tax resident. Wouldn't be a
Tax
tax
resident.
resident in France.
Yeah,
Again.
if you're talking about it, it's tax resident.
Oh yeah, if I'm talking about it, it's
Right.
always tax resident.
Mhm.
Exactly. But it's one of those things that, again, you want to look at these kind of questions because these questions are not, it's not black and white in France. It's not the simple, in America, there's something called the substantial presence test. It's 183 days, you're a resident. Boom, simple. France is a more gray country when it comes to this residency. And again, it depends on your actual facts and circumstances and depends on really what your life is. Because again, you could live in France for 4 or 5 months a year and never become a resident. Or you can live in France for 7 months and be a resident. Again, facts and circumstances, each case is particular.
Okay, so before we say goodbye, okay, first of all, we can end on that note, and I'd like to thank Jonathan and Brian and Patty very, very much for being on this webinar. I'd like to remind everyone that we will be making this available on YouTube. It'll be on Brian Dunhill's YouTube as well as on my own. And as we recorded it, so you can watch it again. And we invite you to pass this on to all of your friends. And the bottom line here is plan ahead and consult with Jonathan and Brian.
Yeah.
Okay.
Jonathan reminded me that his is the most viewed YouTube on our channel. So please share it with your friends, watch it multiple times. If you didn't understand anything, rewind it, repeat.
Okay, but also just talk to any one of us to get your individual questions answered. We're all here for you at any time. So thank you very much for being on. Watch our newsletters so that you can see when the next forums are coming up and sign up. And we'll see you next time around. Thank you, Jonathan and Brian.
Great. Thank
Thanks,
you,
everyone.
everybody.
Thanks, everybody.
Bye.
Bye-bye.